morning. Good morning. Welcome to another pre-market analysis live stream. This is Trading Futures Live, and we do have an interesting week ahead. I want to go over a few things that before I jump into the real content. I want to check some news. There's an interesting data to watch. The S&P 500 one-year performance after the midterms has an 80 years clean record of going higher, meaning after the election, stocks have always performed positively for 80 years, right? That's a pretty interesting thing that I wanted to share. We do have Tesla. Tesla deliveries came a little bit shorter than Wall Street estimates. So shares are down pre-market. And everything regarding to oil and energy stocks are going higher. Okay, oil is going higher. 5%, I guess. We'll review it. Okay. But with that, let's jump right into the news for today. We do have an FOMC member talking in 17 minutes. Then we have manufacturing PMI at 9:45. But the real one, the ISM manufacturing PMI, comes out at 10. So we will set an alert for that news report coming out today. Okay, that would bring some volatility to the markets. After that, we do have a couple members speaking. I think this is Atlanta's, Fed, and Bostic, but this is in the afternoon. Let's review the entire week, okay? Because this week we do have unemployment numbers and job openings, job reports. So those are the two main indicators, two main economic indicators that the Fed is monitoring. Now, I want to say that unemployment or employment numbers, if you will, are the most lagging indicators of all, right? So we might be going out of the recession and the unemployment is starting to move. That's what I have discovered, right? Good morning. Good morning to everyone. Okay, welcome. Guys and girls, welcome. Okay. Then so this is today. Tomorrow we do have some numbers coming from Europe, PPI, and then tomorrow we have durable goods and jobs opening. That's tomorrow. So this is a very important report coming out tomorrow. So the Fed is looking closely to this and see what is going on, if the job market is still tight or is just easing a little bit. All right, then this is Wednesday. Wednesday, we do have some mortgages number, an ADP non-farm employment change. That's another number. Although this one it won't be so important as the unemployment. The unemployment, I think, is Friday. Yes, it is Friday. And we have jobless claim on Tuesday. Couple members speaking. Master. Thursday and Friday we do have the big day. Friday, non-farm payroll and NFP comes out on Friday, and the unemployment rate. Okay, so very busy week, very interesting week ahead. All right, with that, let's jump into the charts. So here is the chart for the dollar, right? The daily chart for the dollar. Um, on Friday, we were very bearish at this point, but we managed to recover from here. I do not expect the dollar to hold this demand, but if it happens to hold, I think we will have more downside on the equity markets. Now, I do think the real area for the dollar is down here. Oh, I need to activate this thing, right? The real area for the dollar is down here, and for it to come to this area has to has to turn very bearish. So it's not close. It's around 3% retracement. Okay. Now the dollar was going up at this point around 17% for the year, which is very outrageous for the dollar. If we go to the lower time frame, we are trapped between these two areas. We did have this demand right here. We rejected a little bit. We tried to defend this pivot, but then we broke to the downside. We're retesting this area, right? And this is the open from yesterday. We gapped up, immediately started to reject. So I do expect the dollar to keep breaking down, but until it breaks this line right here, this is a very important pivot that we try to hold. And on the lower time frame I'm referring to, if we happen to break this to the downside, like always, I will look for the retracement here and a continuation to the downside. Now, I do have some sort of sideways movement right here, this consolidation area. And then because here we had the US Open, and here we did have some London trading right here. So this entire area can function as a demand, right? I do have all this marked off, but this entire area can put a lot of pressure for the dollar to the upside, right? Below this, like I said, this is the next stop, and it's pretty far away, like 3%. Okay. So if we have a turnaround on the dollar today, but I don't think it's very likely. If we have a turnaround on the dollar today, then the same scenario is also possible, right? So we can break, and this can be a lot shallower like this. Okay. So like every day, I will be watching the dollar at all times. For now, it looks pretty bearish to me, and the long opportunity will be when this thing comes back to this side of the chart. Like let's say we go down to a lower time frame, right? 5 minutes. I want to see the dollar retracing back to these points while I'm taking a long on the equity markets. Okay. Either here, these pivots, or here, the upside of the chart right here. Okay. So if we have the internals aligned along with the dollar, then a retracement to this part will be a nice entry long. Okay. If the dollar happens to come down here to these pivots, I will look for a short entry, right? And it'll be a little more riskier because I'm thinking the dollar can continue to the downside, right? So, and I want you to recognize this. If the dollar comes down here and I expect it to hold, then yes, that's the higher probability for me to take a short in the equity markets, right? But if the dollar comes here and I think this demand can be broken, right? So that I'm putting less probability to my trade, okay? Because I'm thinking, all right, the dollar can continue to go down. But for now, nevertheless, the dollar is trapped between these two areas. So here's the long on the equity markets. Here's the short on the equity markets. Okay. All right, let's continue here. All right. I don't know what you mean, but all right, let's continue. All right, this is the bond yields. Now, I'll be very cautious here because the market is retracing to the upside. Bond yields are coming down sharply pre-market, but I wouldn't trust this movement. Look at what happens on Friday. On Friday, we revisit these levels and we came back from here pretty sharply. So I will be very cautious here. And I wouldn't say, all right, the market will continue to go up blindly only because of the bond yields, right? So until I don't break this demand, I wouldn't say the bond yields will contribute to an upside in the markets. Okay, so now the bond yields are in a very interesting area right here. Demand is 367.9. So if they turn around from here, let's say they start breaking levels to the upside, I don't have anything. So that will mean that the market will turn very bearish. Okay, if the dollar holds where it is at. Okay, um, so if this thing just start to go back up, right, and come here, and the dollar is still in supply, then yes, we can keep trying the long. But for now, I think the long is exhausted. Okay, I want to see this thing break into the downside for me to continue to thinking that the long has more room to go. Okay, so remember, rates, if yields and the dollar are going up, that's a short in tech. Okay, mostly Nasdaq. So that's the first one that I'm looking at. Okay, the S&P might be a little bit different, but for the NQ, if both things are in sync and going to one direction, meaning long, the equity markets most likely are going down, or the Nasdaq. Okay. So I do have the dollar just holding right there. Yes, rates are going down, but if rates don't continue to go down, then we will have a turnaround in the market. Okay. So I will need the yield to continue to go down for me to say, all right, we have a better long today. Markets is going up like almost 1%. The S&P is plus 1%. And the NQ is 0.7%. But remember, and here's the next chart that I want to look at is the VIX. The VIX is at 31. So we will have this type of swings, and you will say, all right, it's plus 1%. It cannot go back down, or the other way around. Is minus 1%. It cannot recover. But the VIX being at 31, we will have this volatility, and it's common. It's not uncommon for the market to go for big swings when the VIX is above 30. Okay, so that's one thing that we need to pay attention to. We probably might have to either reduce our size and have like better and more like larger areas to trade from, so the volatility does not stop us out. So that's one thing that we will see in the live session. Okay, now we need to readjust. Is a different trading environment when you're trading off of the VIX of between 20 and 25 than now that we have a VIX at 30. Okay, so market becomes a lot more volatile to the upside or the downside. Okay, so the VIX is holding here. Now we did have this huge drop on the 28th. I think this was Wednesday. But then we are trading in this range, and it's very common for it. Like, look, it holds. I don't think it has a room to go up. I do think this is a level that the market always managed to hold, right? So let's see what happens. If we have a breakup, that means that the market will or are actually going down big time. But it's just Monday. We're starting a new quarter, and is the first trading day of the month. So let's see if we are going to, if we go to the equity market. So let's go to the equity markets. We're gonna skip crude oil for a little bit. If you go to the equity markets, right, and let's take the drawing off. If you go to the monthly, right? If you see here, we did have a very bloody September, but we were going up at the beginning. Like the first move of the month was going up. Here, the first move of the month was going down. So it's not uncommon. We could have a retracement to the upside, grab some orders and continue to go down. If I do expect the market to continue to go down. Okay? So I just wanted to say that if we have a plus 1%, and plus 1% day, does not mean that the market is going to go to all-time highs, but we could have retracement, short covering, a lot of things going on in the market. Okay. So it's the first week of the quarter. It's the first day of the month, so we might have some retracement to the upside. All right, let's go to the lower time frame. Let's go to the daily. On the daily, I do have all these pivots right here, so I do expect this area to put some pressure to the downside. And let's put the drawings right here. And the yellow line is, oh shit, I moved it. Give me 1 second. It's 3709. Let's put it here, 3709. All right, so that's the POC. That's a point of control for all these sideways days, right? So this yellow line is gonna work as a magnet to attract price here. So the majority of orders that happens in this sideways movement, sideways movement, were here at 3709. Okay. I do have some areas that we're just touching. So I do like this area. This was the 4-hour opening on Friday, and then we coming down, we created this drop base drop area with this retest. So I do think this is an area of interest. If we have the dollar and the rates and the yields in demand, this will be a nice short. We do need those two aligned for us to take this short in the ES. Okay. Nevertheless, the POC is right here. So if the POC is right here, I do like this one. Although this is all overnight, we need to go back here and check where is the nice area. And I think it's 3750 is very, very far. So I don't think we'll come into a play today. And then we have 930 right here, but this is before the POC. So I will put a line here for a resistance, probably right there. Okay. But I think this area 3642 to 3659 is going to come into play when market opens. Okay. Are you watching here? Okay, cool. Go see the NQ. The NQ has a bit different scenario. The POC is a lot closer, so it's just 200 points away, and is not up here. If you see, the ES has a better, like a more bullish look here. You see the POC is way above this week, which is Friday's high. On the NQ, the POC is within the week, within Fridays. okay, within Friday's range. So I think the NQ has a more bearish case among all the markets, and the POC is right here at 11,319. And let's go to a lower time frame. I just want to refer to the POC because those areas just become magnet for price. Okay, they're the bulk of orders are right there. All right, so I do have these. Let me get rid of this demand that I had here was old. So I do have this area is at the POC, right? This is 11 a.m. and this is 3 in the morning. And what is this? This is the opening from a Thursday. So this is the opening from Thursday. This is a high from the high from Friday, and then the POC of 4 or 5 days of trading. Okay, so I think this area 11,331 is very important. Like below that, I do have I don't want to trust all this. I do have this one that is 10. I would say it is the same area on the ES, but it's a lot closer. Oh. There we go. Again, I will need the dollar and the yields aligned right here. All right, so that is the NQ. To the demands, if we happen to drop, I do like this type of formation. This is a type of formation that I use a lot for a reversal pattern. So if we come back down here, I think the Nasdaq has a nice formation here to retrace to the upside, right? If we don't get to the 200 before, all right. It created a sort of a double bottom right here, although this is not like close to the pivot, but it created this rejection right here, and it broke to the upside. So another but more aggressive scenario will be this one. And I'm just saying this because all these pivots, okay, they're being tested. They are being tested right now, and they are not putting some pressures to the downside. So this tells me that probably this pivot is not the one that will drive the market down. If we happen to have a lower prices today, so I will pay attention to the next one. This isn't the other one, okay? And right after this one, we do have this supply. So I'm pretty much very neutral. So there are a few things that make me purely neutral and not biased to any side of the market. Obviously, the trend is down. So we just made new lows on Friday. And we were dropping big time overnight yesterday. But we're starting a new quarter. Earning seasons is around the corner. Also, first day of the month. So it's not unusual that we might have some sort of retracement to the upside, okay? All right. I wanna go see the crude oil chart. Because crude oil is pushing the equity markets to the upside, I think. We did have this demand, this supply, and we broke to the upside, and now we're trying to test the 84.50 supply. So I think this supply is a high quality supply. We were here for a few days, almost a week. Okay, so I think this will put some pressure to the downside. If this start to work, I think the markets can continue to go down with it. Okay, so sometimes crude oil correlates with the equity markets. In this case, it is, right? And sometimes it doesn't, right? It's like around 45% correlation. with the equity markets. I don't know if you guys have any question. We can leave this session like this and come back in 15 minutes. I like I said, pretty neutral. If the dollar stays right here, we might have some sideways movement today, some choppy, some chop in the market. Sorry. Look, we're trapped. We're trapped in the dollar between these two areas. Okay. Until we move to one or the other one, I want to be very cautious. Okay. Thank you, Stack. So with that, guys, see you in 15 minutes for the live trading session. Okay. See you.